Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Is this becoming a very so-called interesting summer in the stock markets?
It is. You know, it's been a pretty light volume kind of summer over the last month or so, but this week definitely we got a little bit of a shake-up, and it definitely woke people up out of their kind of the summer doldrums with the market having a pretty good correction yesterday. Nothing that significant when you look at the charts. Really, the SP 500 only pulled back to the 50-day moving average, only down really like less than 2%. Yet, everyone seemed to be in shock and in complete panic yesterday, which was Monday. We saw the volatility index spike about 50% in the last 3 trading sessions from the lows, which is a good indication that volatility or fear is spiking. We saw the put-call ratio, which is how many puts people are buying, which when you're afraid the market's going to fall, you buy put options, which go up in value when the stock market falls. Well, it seemed that everybody was buying put options yesterday, expecting this market to continue to fall. And I also like to look at the New York Stock Exchange volume flow. And yesterday, it was screaming on the sell side. There was more or less 27 shares being sold on the bid, meaning people were just hitting the market button, sell my shares. I don't care what price I get, just get me out, to every 1 share being bought. And I consider a ratio of 3-to-1 to be panic. So yesterday being 27-to-1 is a level that everyone is running for the door. The market's most likely putting in a bottom. And when you group all that information together, which is panic selling, the market gapping down at the 50-day moving average, which is a support level, gaps on the chart pretty much always get bought back up. So if it gaps way down, we're going to have to see the stock market rally back up to fill that gap. So all these things come into play, and as of we're speaking now, the stock market is up. Russell is up over 3.2% today. All the other indexes are up about 1.5%, and we're seeing this huge reversal to the upside. So it's just amazing the amount of emotions where everyone got panicked out of their positions on Monday, and then today they're rebounding with a vengeance without them on board. A typical bull market kind of buck where it's just enough to shake you out and then the trend keeps on going.
What sectors are leading the way right now? Is there anything that you would say, oh, that still looks good?
You know, there's been a lot of mixed sectors. I mean, I follow about 35 plus sectors, and almost all of them are in a downtrend, which is not good based on a short-term basis. When you look at the longer-term trends, almost half of them are kind of in a topping phase, or they're actually in a bearish trend. They've pulled back far enough, and that is a concerning point. The fact that most of the sectors are not really participating and trending up, while the stock markets are actually still very close to all-time highs. They're only a couple percentage away, is a warning sign telling me that, hey, while the stock market is moving up, most stocks are actually moving lower. And a lot of investors and traders will be seeing that in their accounts, where the NASDAQ and the SP 500 were hitting all-time highs just a week ago, yet their trading or investing accounts are actually going lower in value because most people hold individual stocks and not the index. And the index is very heavily weighted with some of these huge mega tech companies like Apple and big shares like that pull the price up. So it's definitely a concern right now. And the big question is this week's kind of drop and bounce, is that a buying opportunity? Or was that kind of a shot across the bow that's saying, hey, This market just had its first wave of distribution selling from some big institutions, kind of unloading shares. Is this the start of many more of those days, and we go into a multi-month correction? And that's where I'm a little concerned, because the market internals are very weak. Not only are the sectors in short-term downtrends and not participating, but we're actually seeing all the defensive sectors rally. Like, we're seeing bonds outperform the stock market. Gold has been moving up. We've seen utilities do really well and outperform the S&P 500. U.S. dollars moving up. When all these things are moving up, that is telling us institutions are really slowly getting out of equities and trying to put their money somewhere else where it'll be more protected, because they're expecting more selling of shares in the future from other big institutions. So we've got an interesting time for sure over the next week or two, and it's definitely going to be a time for people to be active and get ready to either stay long the markets or get ready to move to cash and get very defensive while the market's correct.
We'll have more with Chris Vermeulen right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's going on with crude?
Yeah, crude oil definitely took a good haircut this week, down over 7% on Monday. It actually had a really nice rally. It hit a Fibonacci measured move pretty much to the dollar, or within actually a few cents of the target. And as soon as that momentum ran out, that target was reached, we saw a big selling step in. That was up around the $77 per barrel level. And the last time it hit a Fibonacci target like that, we actually saw it hit $67, and it pulled back about 14%. Well, the recent pullback that we've seen in crude oil is 14% from the highs as well. So this isn't anything out of the norm for crude oil, but it definitely has kind of got all the momentum traders out. Monday's sell-off was enough to run all the stops, big volume flow, everyone kind of ejected out of those trades. And so I think crude oil is going to be pretty choppy for a week or two as it tries to find support and chop around. But overall, it is still in an uptrend. It's oversold. It's at support. And I think it needs some time to kind of mature and potentially build a launch pad for $88. That's the next upside target based on the chart patterns that we've seen. And there isn't a reason why it shouldn't go up there. But it's all going to really come down to what the overall stock market is going to do, because if the stock market does eventually roll over here, crude is going to follow suit with it and sell off. So we're really just trying to get a gauge on where stocks are going next, and depending where they go is going to really kind of dictate, I think, where crude and other commodities like precious metals are going to go.
Do you think bond interest rates will go up if people are nervous about the stock market?
I think bonds will go up, which means the rates should be declining, which they have been. You look at the 10-year note, I mean, it's just been dropping like a fly the last couple of weeks. And, I mean, when there's fear in the market, people want to go in and buy bonds, and they bid the price up of bonds, and you get a lower return, lower yield on it. And that's what I see happening. I actually see bond prices going up and yields continuing to drop overall going forward. And I think there's still quite a bit of upside. I think there's still about another 6 or 7% upside move in the TLT, which is a bond ETF, to the upside. And that means we're going to see some more fear in the stock market over the next couple of weeks. Now, with that being said, we can see bonds move higher, and we can see the stock market move higher together. That I think is a scenario that actually I think it's happening and is going to continue to happen, but it is a red flag that eventually we're going to see the stock market have a much larger correction, because every time we see this happen in history, that is a sign that the stock market goes into a 5+% market correction.
What's going on with gold?
Well, precious metals have been, they've been moving up over the last couple of weeks. They kind of ran into resistance last week, but overall they have been performing very well, trading kind of sideways so far this week. Whenever we see panic selling in the stock market, we see precious metals sell off. There really isn't that much of a safe haven in general when there's panic selling at the level that we saw on Monday. When everyone is in complete panic and they just want to sell everything, gold gets sold off as well. And we did see that happen, but it's also the quickest to rebound because it's just seen as a defensive play. So money will naturally want to quickly gravitate back to that after kind of the panic dissipates. So I do think gold's going to hold up. I think it's going to probably try to continue to grind higher with bonds. We saw this happen before the COVID crash. We saw bonds rally, utilities rally, gold rally, and then the stock market went into a big correction. And I think the same thing is happening right now. Bonds have already rallied for a couple of weeks. Gold's rallied for a couple of weeks. Utility sector is coming to life and has put in some pretty decent rallies in the last week as well. So a market correction is coming, I feel, but it could still be several weeks out before the momentum actually stops and the stock market rolls over.
Bitcoin fell from 60 grand to 30. What's going on there?
Well, yeah, I mean, it obviously went from kind of a bubble euphoric stage to it broke down and kind of popped. And over the last couple of months, it's struggling to find a bottom. There's just this steady stream. When you look at the chart, it's a steady stream of people giving up on that asset class. It's just kind of red bar after red bar, gaps a little bit higher, but just a stream of people selling their Bitcoin because they're bored of it. They think it's over. And if Bitcoin ends up closing kind of below 29,000, somewhere right in that area, I think it's got the potential for a much bigger correction. I think we'll see the second wave of this move to the downside, and I think we could see it go from 29,000, which is more or less what it's at today, all the way down to about 22,000. And because there's such a herd mentality and it's such an emotional group of people who own Bitcoin, the price chart is going to do just like it did with the bubble phase. The bubble phase was a perfect emotional move to the upside. The pop was how pretty much it always pops. And then we need to finish the final washout in price. And that means we could see it drop to 22. There'll be a huge wave of panic, and we could see like an intraday spike down in price all the way down to about $11,000 or $12,000 of Bitcoin. And I think it'll have a knee-jerk intraday reaction right back up again. But I think it's primed and ready for a huge collapse that will catch everyone off guard who's not paying attention to it and not reading the charts, because that's actually what the charts are pointing to, is one final leg down that'll just annihilate anyone who's still holding on and trading with that hope mentality.
Is this a sign of heavy manipulation? People want to drive it down, hoping that they can close in and monopolize more of that particular market and then wait for it to rise?
It's possible. I mean, if something can be manipulated, there's always going to be a group of people out there trying to do it and figure it out. And as we know, the financial markets are heavily manipulated, and it's got to be happening to some extent. We'll see how it goes. I mean, I try not to read in or think too much about the manipulation because there's nothing we can do about it. We can never really prove it. All we got to do is follow price, and that's the nice thing. As long as we follow the price action and we don't try to predict it, because predicting tops and bottoms is what kills you as a trader or investor. But if you just follow the price, you're going to get in when a new trend has started. You're going to get out when you've figured out that it's turned around. It's going in the other direction. It's not about always getting in at the bottom, out at the top, or vice versa. It's about getting in the middle or near the beginning of a new trend and exiting as it's kind of finishing that trend and starting to reverse. So it's about playing that safe kind of section, not so much. I don't worry about the manipulation and all those things because It's just uncontrollable. It's like trying to predict the news. What news event is going to come out next? It's totally random.
There's 7,000 at least cryptocurrencies. Are there any bright lights in there that you think even if Bitcoin crashes and burns that they'll survive and do well?
Well, you're asking the wrong guy. I'm not heavy into the crypto, so I'm sure there's a bunch of them. I mean, I think there's a few that have some pretty interesting opportunities. Do I know them? No. I just don't follow that space close enough. But there's always usually a better alternative out there that most people don't know about. And you'd have to definitely dig into a crypto fanatic to figure that out.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim. Thanks for having me.
My guest has been Chris Vermeulen from the technicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on Housestreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. Housestreet.com radio is a production of House Street Media Incorporated.